Okay, so we've got Wipro's latest financial results here. And wow, a lot to unpack. It looks like the board meeting was quite the marathon, huh?
Yeah, I mean, it stretched over 2 days, January 16th and 17th. That tells you they had some serious business to discuss, right?
Right. So they have approved the financial results for the quarter ending December 31st, 2024. That's what they were mainly doing there.
Exactly. And they're releasing both standalone and consolidated results under Indian accounting standards or IND AS and consolidated results under IFRS, International Financial Reporting Standards. So they're covering all their bases.
Okay, that's a lot of information. So basically, what are some of the big numbers we should be paying attention to?
Well, for starters, they're declaring an interim dividend of 6 rupees per equity share. That's a pretty good return for shareholders, I'd say.
Okay, yeah, that definitely sounds like good news for investors. So when is that payment happening?
The payment will be made on or before February 15th, 2025. And the record date to be eligible for this dividend is January 28th.
Got it. So anyone who owns shares before January 28th will get that dividend. Now, what about the financial results themselves? Anything stand out?
Well, let's look at the standalone results first. The revenue from operations was 168,030 million rupees for the quarter, which is actually slightly down from the previous quarter.
That's interesting. So it's not like a massive drop or anything, but it's a little down from the previous quarter, right?
Right. And the profit for the period, that's after tax, came out to 28,121 million rupees. That's definitely something to consider and compare with past performance.
Okay. So a little dip in revenue, but still a good profit. That is good to hear. So how do the consolidated numbers look in comparison?
So the consolidated revenue from operations is much higher at 3,188 million rupees, showing the impact of their subsidiaries.
Okay, so their overall picture is a lot bigger when you consider the whole group. What about profit at the consolidated level?
The consolidated profit for the period is 33,667 million rupees. That's also higher, reflecting the broader financial performance across all their units.
Right. So it shows the importance of their subsidiaries. So it's like a main dish versus a meal when you put them together.
Exactly. And keep in mind, these are interim results. It's like a snapshot in time, giving us a good idea of how the company is doing in this specific period.
Got it. Now, I noticed they mentioned an auditor's report. Does that say anything important we should be aware of?
Yes, both the standalone and consolidated financial results have been audited by Deloitte Haskins and Sells LLP, and the auditors have issued reports with unmodified opinions. That means there are no issues with how the reports were put together.
Okay, so that's good. That adds some credibility to these results. So we know they've been looked at thoroughly, right?
Exactly. And it's important for investors to see that the numbers are reliable. It's like a verification stamp.
Makes sense. Now, moving on, there are also some specific expense items listed. What are some of the interesting ones?
Well, employee benefits expense is quite significant, right? It's the largest expense item, coming in at 133,035 million rupees for the consolidated results.
So it's a good indicator of their investment in people, right? I mean, it's a good thing to keep in mind. It's a good benchmark to keep in the mix.
Yeah, also subcontracting and technical fees are also high, which shows their reliance on external resources.
So it's a mix of in-house and outside talent, which I think is pretty common for tech companies, wouldn't you say?
Right. And they've got these expenses across many different areas, including travel, marketing, and even software licenses. So there's a good mix of where the money is being spent.
Okay, that's pretty comprehensive. Now, let's get into the other comprehensive income, or OCI. What does that include?
OCI includes items like remeasurements of defined benefit plans and changes in the fair value of investments. It's a more complex area, but it gives us a broader view of the company's financial changes.
Right. So it's not just the profits they're making, but also changes in value in other areas. That can be confusing, I guess.
It's like, think of it as a more holistic view, covering areas where the impacts aren't immediately obvious.
Right, I guess. Now, let's talk about the share capital. There's a mention of a bonus share issue in the reports. What happened there?
Yes, they actually issued bonus shares in the ratio of 1 to 1, which means for every one share held, shareholders got an additional share.
Okay, so it doubled the number of shares for everyone. That's why it is called a bonus. And they did that on December 4th, right?
That's correct. It increased their paid up equity share capital, and it impacted how they calculated their earnings per share for past periods, like they were adjusted for it.
So it's like a stock split, but you don't pay for it. And they have to adjust their numbers to keep things consistent, right?
Exactly. It's like adjusting a recipe after adding extra ingredients. You want to keep the original proportions intact.
Now, this is probably a good time to ask our listeners to please take a moment to like, share, and subscribe to the YouTube channel if you want to learn more about finance and company updates. It would really help us out.
Absolutely. And we really appreciate your support as we dive into these financial reports. There is so much to uncover, right?
Yeah. Okay. So let's get back to the report. One more important thing. They mention a buyback of equity shares from last year. What was that about?
Oh, yes, they did a buyback of around 269 million equity shares, which resulted in a significant cash outflow. The buyback, it reduced their share capital, you see.
So they reduced the number of their shares in the market, which is like reducing the slices in a cake, making the slices bigger for everyone else, I guess.
Yeah, that's a good way to put it. They used their retained earnings and securities premium to do that.
Okay, so they have a mix of strategies, paying dividends, buying back shares, and it looks like they're trying to keep a balance, right?
Yeah, it's all about managing their capital, creating value for shareholders, and navigating the market as it comes along.
Now, one thing that always gets me confused is segment information. What can you tell me about Wipro's different segments?
Wipro primarily operates in two segments, IT services and IT products. And the IT services segment is then divided into geographical areas like Americas 1, Americas 2, Europe, and APMEA.
Okay, so it is basically divided by the types of services they offer and where they offer them. It looks like IT services makes up the bulk of their revenue, right?
Correct. And the America segment is really big for them. It contributes significantly to their overall revenue and segment results. It's like their main growth engine, I guess.
So it's like the main pillar of their business strategy, and that's where they're seeing the bulk of their business activity.
Exactly. And the report also includes details about how they attribute revenue based on where customers make their primary buying decisions, which is important to understand where revenue is coming from.
Okay, that makes a lot of sense. So it's like tracing the money to its source to see the big picture, right?
Right. And that helps you understand which regions or sectors are driving their growth. It gives a more granular perspective of where their business activities are most active.
Now, they mentioned that they use both Indian accounting standards and international financial reporting standards. Why two different sets of standards?
Well, they use Ind AS for their reporting in India, you see, and they use IFRS for international reporting. It's like having two different instruction manuals to navigate different regulations and reporting requirements.
So it depends on where the report is going and what the local standards are. That's very important. That makes sense.
Yeah, it's about compliance, making sure their financial information is clear and consistent for stakeholders everywhere, no matter the place.
Okay. Well, this has been very enlightening. It seems like they had a busy quarter with all the buybacks and bonus shares and dividend payouts.
Yeah, it's like they're taking a lot of steps to manage their capital and return value to shareholders. It shows they are very active in their financial strategy.
Definitely. And while there are some challenges, I think overall the results are pretty solid. So it looks good for the future.
I agree. It's like a snapshot of their current state, giving us insights into their strategy, their performance, and their outlook moving forward.
So after everything we've gone through, what do you think investors should take away from this report?
Well, I think investors should note the dividend payout, the bonus share issue, and the fact that they had both standalone and consolidated results, that they are actively managing the company.
Right. It's all about seeing how they're positioning themselves strategically, not just the numbers themselves, but the actions behind them.
And remember, this is just a snapshot for this period. So it's like a puzzle piece. And you need to see how the next period will look like to have a complete picture.
Well, that was a lot of information to digest. Any final thoughts before we wrap up this segment?
Yeah, just that it's always important to look at the underlying details and understand the context before making any decisions. It's like digging under the surface to see what's really going on.
Great point. So, thanks for breaking all of this down. What do you think the next earnings report will bring?
Well, that is anyone's guess, but we will make sure to be here for it to go over it. So make sure to stay tuned for next time to see what happens next.